You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. Time for a little bit of TWIFO This Week in Futures Options. My name, of course, Mark Longo from the THEOptionsInsider.com, as well as from the network upon which so many of you have been mainlining these days. I'm hot off the plane from the FIA Boca conference, a very futures-heavy week behind me out there, discussing a lot of different products out there. A lot of people in the future space also expressing their just amazement at the continued explosive growth rate in the options market. So a lot of interesting stuff going on this week. You'll see some of it hitting the network, including my conversation with the folks over there at CBOE about all the things that are cooking in their neck of the woods, the zero-day explosion, vol, everything else you could think of. That'll be coming to the network soon if you want to hear it. Before then, of course, head on over to the Pro. Our Pro folks will be getting it first. TheOptionsInsider.com/pro is the place to go. Getting all those fun exclusive goodies, including, of course, your couple of shows a week out there. You will be getting an awesome, if I do say so myself, double Pro Q&A session next week with two guests in one. Two guests fighting into the hot seat at once. Both of whom have been on the show before, including Carly Garner and the once and future Dr. Vix. Will they fight? Will they debate? We'll find out. But get those questions in now. It's going to be a jam-packed, awesome double Pro Q&A session. That's coming up next week. Of course, you get that content from FIA. A whole bunch of other fun stuff. TheOptionsInsider.com/pro is the place to go if you want to get all those goodies on a device near you to listen to at your leisure. As we go around the horn, see who's joining us on the old TWIFO program today. I am pleased to welcome back to the old CME hot seat our old friend, Mr. Rich Excell, the assistant professor of finance over there at the University of Illinois. Rich, welcome back to TWIFO, sir.
Glad to be here, Mark. It's good to catch up. There's a lot going on in the world as you were talking about. So always fun times to go through the markets.
I've got futures on the brain this week, Rich, as a result of the conference. So a good time to dive into a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, to the world of the movers and shakers we go. Rich, we've mixed it up a little bit since the last time you joined us here on the show, which, by the way, your last appearance on TWIFO, it's been a while, all the way back to August 17th. Of last year, so we haven't checked in with you on TWIFO in quite some time. Since then, we've added a little bit, a new wrinkle to the movers and shakers, where we also talk vol. I know you like yourself a little bit of CVOL, so I can't imagine that one will be too much of a shock to you, Rich. But let's start off the old-fashioned way. Where should we begin our journey this week, to the light side or to the dark side, sir?
Well, a lot of stuff it's been the rally of everything, it seems, across the board. I know that not everything is in the futures market, so I'm interested to start to the dark side and see what's going on down there.
All right, to the dark side we go, listeners. And if you check out this report for yourselves, listeners, you will see it's a little bit more even keeled than we've seen in recent weeks. Recently, it's been almost all upside, all light side all the time. In fact, last week I think we could maybe scrape together a dark side 10 if we really tried, but that was about it. This week, it's probably closer to 60-40 green versus red out there. So a little bit more red to be found out there. To the dark side we go, listeners. Number 5, to the dark side this week, we got the 30-year off about 2.33%. So starting things off in the rates. From the rates, we move off to the livestock, live cattle, off nearly 2.5%, 2.45%. Number 3, back to the rates all the way out to the ultra 30-year, listeners, off 3.04%. Number 2, heading off to one of Rich's favorite stomping grounds. Get a little bit of FX flavor. It's the Nikkei. Obviously, that's equities, but the yen-denominated Nikkei. So getting a little bit of currency exposure in there. Spoiler alert, maybe we'll come back to a little bit of FX in a little bit. And then the number 1 dark side mover, listeners. You know it. You love it. It is Nat Gas, off 5.64%. It was number 2 in the other direction last week, up nearly 9% on the show last week. So giving up almost everything that it made last week. Now to the light side we go. Let's go to number 5, kicking things off in crypto, listeners. Man, we've already been on quite the journey through the products, and we're only at number 5 to the light side. It is Bitcoin, up 3.54%. It was number 3 in the same direction last week, up almost 8.25%. So don't need me to tell you, it's been a banger couple of weeks out there for Bitcoin, listeners. Number 4, back to the world of energy, in particular, is the energy sector, this time of the S&P, up almost 4.5% this week, about 4.45%. Number 3, keeping it in energy, but moving out of the equities, it is RBOB, up 4.57%. Number 2, heading out to the ags, it is soybean oil, up 4.66%. And the number 1 light side mover, oh my goodness, on the rampage this week, lean hogs, up a whopping 19.82%. I have to dig in there, see what is underlying that move. But before we do that, Rich, we also like to talk a little bit of vol here on the movers and shakers. So same question for you, sir. Where should we start on the vol front, to the light side or to the dark side, sir?
Yeah, I want to mix it up. I'm going to go light side because I think that in the vol market, it's been quite the opposite of everything else, not surprisingly. And it seems like there's not been a lot of overall vol at the aggregate level. So interested to see what's on the light side.
All right, to the light side of volatility we go. Listen, you can see these reports, I should say, for yourselves if you head on out. Just type in your browser, listeners, CME and CVOL. You should be able to get there. To the dark side, to the light side you wanted, Rich. To the light side we go. We start off in the aggregate energy CVOL, listeners. So again, they take the whole complex, they break it down to one number. That's at nearly a 52, up about 1.7 points on the week. Number 4, soybean oil, 32.45, up about nearly 2 points, 1.95 points on the week. Number 3, we go off to the metals. It is silver, 27.35, up about 2.39 points on the week. Keeping it in the metals. So number 2, it is copper, 22, about 3/4, up a little over 3, about 3 1/3 points on the week. And the number 1 light side vol mover, it is inescapable, listeners. It is Nat Gas, 70.19 right now, up 3.36 points on the week. So Nat Gas. No matter where we look, Nat Gas is inescapable. All right, to the dark side of volatility we go, listeners. Number 5, it looks like it's all rates this week, listeners. Number 5, it is the 5-year at about a 120.4, off about 1.4 points. Number 4, it is the 2-year, 133.62, off about 1 3/4 points. And again, you can see if you pay attention to the Treasury complex that these obviously are not the equivalent of the 30-day vol out there. There's a little bit more going on with the CVOL calculation. Number 3, it is the 30-year going all the way out, listeners. 100 3/4, off 1.86. You know that if you know the 30-year, you know it doesn't trade at triple-digit volatility. So intriguing stuff afoot out there. Number 2, it is the aggregate Treasury CVOL, 114.1, off about nearly 2 points on the week, 1.91 points. And the number 1 dark side mover, everyone's favorite in the fixed income side, it is the 10-year, 111.04, off almost exactly 2 points, 1.96 points on the week. But I teased it earlier, Rich. I know you have an FX background, and we don't really get a chance to talk about a lot of FX here on the show. And a little birdie told me you have a fun new report that just came out about all things Mexican peso. So I think to the world of FX we go.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, listeners. Yeah, you don't hear that drop very often, do you? But to the wonderful, the head-scratching, the often quiet world of FX, we go out there to kick things off this week. Go into that cmegroup.com/TWIFO drop-down. You're going to go down 1, 2, 3, 4, 5 slots to foreign exchange. And then we're probably going to, well, I won't spoil it, but we did talk peso, so we're probably going to head out there. So you're going to go bypass the FX majors. You're going to go into FX emerging markets. And from there, you're going to see a peso USD right at the top of the list. Mr. Rich, you recently came out with a report in your Excel with options column saying, will we see a repeat performance from the Mexican peso? So let's dive into that. What caught your eye? What were the results of your analysis? And you always come armed with a fun options trade. What was your fun trade out there in the land of the peso this week, sir?
Yeah, I mean, it's I'm always interested to look at places where we've had some really, really big moves and just try to ask, like, can this continue? What have been the drivers for this, et cetera? Peso, one of the best performing currencies the last year, certainly maybe in the last 2 years. Like, can this continue to go on, and what's been kind of driving it, et cetera? Now, of course, I think the first thing that that I look at, first thing that I think a lot of people look at when they think of the Mexican peso is oil, right? And so if you look at how the peso's been doing relative to oil, it really hasn't been the driver of it, believe it or not. And I think there's been some other drivers kind of going on there. And so then like, okay, well, that's not the case. And so another thing that most people look at when it comes to any sort of FX pair is like, what about interest rate differentials? And so I kind of looked into that a little bit too, and that was maybe a little bit more helpful in trying to indicate what's going on. And then kind of kept drilling down a little bit and looked at a lot of different potential drivers for the peso, including looking at U.S. presidential polling odds and things of that nature. No real no real strong correlation there. Seem to have periods where the different candidates drive the peso at different times. So there's nothing really there to look at, which is kind of interesting. But really, what it kind of comes down to, I think, when I go back to my days in FX and what the big mega hedge fund managers that you all know and love, what they would be doing especially when you're talking about emerging markets, is looking at it from the standpoint of the investment returns in both the bond markets and the equity markets, and emerging market foreign exchange is highly correlated to the returns in equity markets and interest rate markets. And so the money tends to flow in and flow out all in kind of one big batch, right? So when they think there's higher returns to be had in an emerging market country, you'll see money flowing in to kind of go into equity markets or fixed income markets, and that's going to drive the currencies higher. And so oftentimes in the developed countries, we might actually see a bit more of a negative correlation, but in emerging markets is a very positive correlation. And so as I was looking at it, I'm like, that had been certainly been a pretty good driver. If we look at, especially the equity markets, you look at the relative returns of the Mexican Bolsa versus the SPX in 21, 22, even first part of 23, that was a big driver of why the peso was strengthening so much. But what's really kind of caught my eye is that, not surprisingly, I don't think now when we look at what SPX has done, certainly over the last 9 months at least, that the returns in the SPX have been much, much better than the Mexican Bolsa. But the peso still stays at its pretty high levels. And so as I looked at it in this report, I'm like, maybe there's a chance for some downside here, because if money is going to start flowing out, chasing these returns in the market like the US, for instance, that might be a time when this kind of positive correlation returns, and we might see some weakening in the peso. And so, as you mentioned, I always like to look at CVOL, not just the overall index, but look at the up variance, the down variance, skew, things of that nature. And as I put it all together, I actually looked at some of the positioning too, and some of the position the commitment traders still look pretty long. Like this might be a chance to really play the downside in the peso, but not only just play the downside of the peso, but the vol is sitting at kind of 6 month to 1 year lows. And so I'm like, not only do I want to be short peso, but I want to be long vol, because the vol corresponds, and so vol would spike as the peso weakened, and I'm getting it at a low level. And so putting that together, I'm like, I need to find a bearish idea that also gets me long vol, so that as the peso goes lower and volatility spikes, I can really kind of benefit two different ways. And so what I put together is a short 1x3 put spread, where I'm short call spread and long 3 times the puts. So I funded this by selling a kind of an at the money, slightly out of the money call spread, and use that premium to buy 3 times the number of out of the money puts. And that really creates the structure I want from both a delta basis, but also from a vega basis. And I think that really, as I put all the different pieces together, lined up from a positioning standpoint, from a catalyst standpoint, from a volatility standpoint, I think it all kind of made sense to me. I don't know if it made everyone else's head spin thinking about those things, but that's what it was looking like to me.
I didn't realize that was a ratio, so that adds a little bit of extra fun to it there, Rich. So yeah, just to reiterate, listeners, it was a short June 586 even call spread versus 3x of the 560 puts there, Rich. So I like it, getting a little bit of what's wrong with a little bit of free downside, right? If you like it for 1, you gotta love it for 3, right?
Absolutely. I mean, you could do it, 1 up for sure. But I think, to me, you're getting, if you can buy volatility at a low level, why not try to add a little bit, especially when you're kind of essentially subsidizing that by selling some of the call spreads to fund it. So I always like kind of going for a little bit of convexity, a little bit of leverage if there's not a huge cost to it.
You like that one, listeners? Hit us up. Let us know as we go out to find out what else is trading out there in the old peso USD this week. If you're wondering where it's trading, by the way, one of the things I love about FX, uniformly pretty much across the board, Rich, are the just absolutely banana strikes. I love it. I love everything about it. Everything trades in completely wonky decimals and fractions. It's old school, but it's not even always old school 16ths and 8ths and all the fun I used to know. But just straight up funky decimals, which I know a lot of our listeners sometimes have a hard time coming to grips with, listeners. But that is the case out here in the old peso USD this week as well. Hanging out in that front future at a whopping 0.0591 to be precise. Kind of unched on the week, which again is kind of par for the course out there in the world of FX, unfortunately, which is why a lot of them don't make it onto our underlying or even our vol movers and shakers that often every week. That said, a little bit of a anomaly out there with the Nikkei. Not really an FX play in the sense that it's an international equity index, but it is yen denominated. So that's where the FX comes in there. But I digress. Let's get out to the world of the peso. How many contracts go up in peso USD every week, listeners? A whopping 12,000. So does some paper out there. And if you're wondering, are they as obsessed with 0-day as seemingly the rest of the options market is? In the case of the peso USD, the answer is a resounding no. Of that 12,000 contracts, listeners, 99.3% went up in the Gies expiration contract, has a whopping 267 days left to go. So only 0.7% wanted to play anywhere outside of December this week, listeners. So intriguing stuff. If you're wondering, what is the vol out there? By the way, the future in December, a wee bit lower, 0.0574 to be precise out there. What is the vol? You might be saying to yourself out there in Gies peso USD. It's about 10 and a quarter, off about 3/4 of a point. So a decent vol move out there this week. I mean, you're only starting at a base level of a little bit north of 10. Losing nearly a full point of vol is actually something significant. There is a little bit of skew action out here, though, which is fascinating. If you're not familiar with FX, listeners, then you might be wondering, how does the skew really shape up out there? And right now, it's looking like a pretty firm equity/investment type skew, because the puts are pretty heavily bid, and the calls, nobody wants them. Last week, the puts were 14.6, nearly 15% bid. Again, you're starting at a low baseline, only 10 points, but still pretty hefty premium for the puts. This week is coming a little bit, 12.7% bid. Still frothy, but coming in a little bit. The calls last week, 8.1% cheap. This week, 7% exactly discounted out there. So puts are bid, calls are offered. That seems like that is the case pretty much across the entirety of the term structure. And I said 99% of that paper went up in Gies this week. Let's find out what the heck they were up to, listeners out here. I hope you like yourself a little bit of Gies puts, because that's what was lighting it up out here. It looks like on Monday, listen, by the way, the most active contract are the 0.0605 puts in December. They traded exactly 6,000 times. So yes, 50% of all the paper this week went up on that one put strike, the 0.0605 puts. They went up 3,000 times on Monday opening. Looks like a roll from the 0.061 puts down to the 0.0605. So a little bit of a put roll there, 3,000 times. So that's half of our paper right there. And then looks like it traded again today, but a little bit different strikes. This time, 3,000 of the 0.0605 puts against the 0.059 puts, also going up 3,000 times. It looks like both of those strikes have 3,000 openings, so they could potentially be rolling again from the 0.0605 puts down to the 0.059 puts. So, Rich, did you have a massive December put roll on your docket for the peso options this week, and anything else catching your eye out there, sir?
I didn't, but I'm intrigued because, like I mentioned before, one of the things I looked at was the if there's any predictability of who wins the election and what that might mean for the peso. And I wonder, well, I don't necessarily think, at least from what I've seen so far in the movement in the last 6 to 7 months, hasn't really suggested anything. You can certainly make a case one way or the other of why a different or the same administration might matter for that currency pair. And so setting something up in December, I can certainly maybe see the point for that. Even though it wasn't me, I can certainly see where they're going with that.
A little bit small size for you, only about 12,000 contracts. So I expect bigger from you. As we keep on rolling, looking at some of the other data you've been crunching your numbers on, and also looking at our vol movers and shakers this week, listeners. It is all losing vol in the rates complex. I think we'll head out there next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, let's go out to the world of rates. Listeners, go into that drop down, pop out of FX, and then go down one slot to interest rates, and then U.S. rates. And where we hang out from there is anyone's guess. Rich, you've been talking a lot about the rates space of late. Obviously, not surprising. Powell, inflation, very much on the docket over the course of the last month. Still are today. In fact, you were just tweeting about big week for inflation out there, something you're keeping an eye on coming into the start of the show today. You also put out an interesting report in your Excell with options last month about some opportunities in the SOFR market based around FOMC uncertainty. I had someone come up to me at the FIA Boca show this week, Rich, and asked me about that, asked me about SOFR and about, if there's a lot of interest in it on the show and if we talk about it on the show. And I told him the truth. I said, it's such a beast for most of our listeners to come to grips with. There is so much paper, so much volume in just about every month and strike out there that condensing it into a digestible form on a show like this is a difficult, nigh on impossible task. We do struggle to do it sometimes. But it sounds like you're coming to grips with SOFR out there, Rich. So what was catching your eye out there in the SOFR markets leading into and coming out of the whole FOMC uncertainty, sir?
Yeah, for sure. I mean, it is definitely a beast, as you say. I mean, you can remember the busiest pits on the CME floor were the Eurodollar pits back in the day, and now that volume's all moving to the SOFR complex, right? And so there's a lot going on, and there's a lot of different places to look, and a lot of different people are looking in different ways. A couple of things I would say as one, first of all, kind of going back to when you look at the light side and dark side of the CVOL, just to clarify for your listeners, the numbers you're talking about in the CVOL in those treasury products, that's the yield volatility. So CVOL calculates both the yield volatility and the price volatility. I think most might find that the price volatility is more consistent with the numbers they're used to, kind of like high single digit, low double digit type of vol on a price basis. But on a yield basis, the vol is going to look a lot higher from that standpoint. But that said, whether apples to apples, whether you're looking at yield or a price basis, again, it's another complex where the volatility had been pretty low, and if you look at it over its kind of recent history, and to me, inflation is the story, right? We had inflation as the story for quite some time, and then one of the things that I think has been a big driver behind all of the risk asset rallies is that the market has this narrative and this view that inflation is no longer a problem, and so I was kind of I've been talking up quite a bit that in the fact that I don't think that we were going to see any rate cuts this year. And the market at the start of the year had quite a few rate cuts priced in. If we go back to June of this year, you could see there's almost 7 rate cuts priced in to the December Fed funds futures contract. By February, that had come down to about 4.5 cuts. And if we look at it today, after some of the inflation numbers, it's down to 3 cuts. And so the market has come down quite a bit. And in some ways, kudos to the risk asset markets, whether it's crypto or tech stocks or whatever, but they've held in pretty well in the face of the fact that the bond markets are kind of repricing what's going on. And so what I was looking at in the SOFR is like CME's got a really cool tool, the SOFR Watch tool, which allows you to basically, it takes the Fed expectations price in the market using the Fed funds futures. It allows you it takes what is the kind of the average basis between Fed funds and SOFR. You can put in a different number if you want, but then it allows you to put in your own expectations of what you think will happen in terms of Fed cuts, and then see where your views differ from the market and what that means for your implied SOFR futures curve versus what the actual SOFR futures curve is. And so I was playing around with that to see not only, where my view differed the most, but also where that impact might be the most, and where the trade might be, if you will. And so that's that's kind of what I was trying to highlight in that piece, is this functionality of this really cool tool that says, okay, I know that I've been having a view that I didn't think there were going to be any cuts this year. The market thought there was going to be a lot, but where was the inflection point where there might be the most bang for your buck, if you will? And that was kind of the June contract for me in SOFR, where there's the biggest delta from my view versus the market. And so again, with the volatility starting looking lower, looking for long vol opportunities there, looking for so the SOFR is quoted obviously 100 minus the price is the yield. So if I'm looking for higher yields, I'm going to be looking for lower prices on that standpoint. So that's basically what I was looking to do. And then that came out a couple of weeks ago. But then as we've had a huge week of inflation this week, and that's what I was tweeting out about today. When you look at the kind of what we've seen is that you look at the CRB, and not even that, you could look at the tradable commodities. Of course, here we are on TWIFO, but even if you look at the raw industrials, the CRB raw industrials index, which is an index of commodities that are not tradable, that tends to lead all the inflation measures by a year, maybe more, depending on the inflation measure you look at. And that fell considerably from peaks in 2021 all the way to lows in early 23. That's coincided with lower CPI, lower PPI that we saw all throughout last year, which has led to this narrative of lower inflation. But it bottomed last year and has been moving higher really for about 9 months, almost 12 months at this point. And that's what would seem to suggest we're going to start seeing consistently higher inflation readings. And in fact, that's what we've seen, right? With the CPI and PPI this week. I think we'll see it in the PCI, or sorry, the PCE that's going to be coming out too. And I'm just wondering if that combination of now higher inflation, or certainly inflation that's no longer falling, combined with still high rate cut expectations, is going to create some opportunity in the SOFR market, if not other markets too.
Now, before we keep going, that is a great point you made about the yield vol versus the price vol out there in the rates, because the CVOL tool defaults to scanning by yield vol. And I get why they do that. It's probably a little bit more exciting way to do it. But I know also for a lot of our listeners, that comes out with a completely obtuse triple-digit number that blows their mind sometimes, right? So I did just rerun the CVOL movers and shakers scan by price volatility as opposed to yield, which is the way it typically defaults. And we have a different vol movers and shakers that way, listeners, with 3-month SOFR leading the dance to the dark side at number 1, followed by a little bit of FX in there. Rich, the Aussie dollar USD at number 2, WTI number 3, Swiss franc USD. How often do you see that? At number 4, and then live cattle at number 5. So if you do play around with the CVOL tool a little bit, Rich, it does offer some intriguing nuggets out there. So would you say for your utility going forward, would you prefer to see it done by the yield vol or the price vol out there in the rates, even if the yield vol may be a little bit obtuse for some of our listeners, sir?
Yeah, I think the price vol is probably one that it's one that people would be more used to. I think it's one that people are going to actually experience, right? If you're trading in those futures markets, you're trading price, you're not trading yield per se. And so you're going to probably be experiencing that price vol a little bit more. And so I think that's probably something that would make more sense to people.
Yeah, I'm looking here, running it that way, listeners. The only rates, nothing makes it in the top 5, even the top 10. The rates 30-year comes the closest. They're probably about number 13 on the list out there. So intriguing stuff. So if you're one of the many who was maybe a little bit curious about why we were getting these funky numbers out there for rates CVOL, that is why. Speaking of funky, Rich, doesn't get funkier than good old 3-month SOFR, which I was talking to some folks, again, down at FIA about this, and I was asking them how they like the 3-month SOFR now versus the old euro dollar. And I think the response was something, 300% better or something like that. So across the board, everybody clearly happy with the new SOFR slotting in to replace euro dollars. It's also reflected in the volume, listeners. 5.2 million contracts on the tape out there this week. So yes, a wee bit of paper out there this week, Rich. And it seems like the SOFR complex is lining up behind you, Rich. You said you were hanging out there in the June expiration. That is where 21.5% of the paper is going out this week with a full 92 days to go. So we're going to head out there as well. By the way, at about 94, almost 94.85 out there on that June future. By the way, I do love most of the fractions out here in SOFR, going back to the old eighths and teenies. That's what I cut my teeth on in this business, Rich. I can do eighths and teenies in my sleep. Those are fractions that are near and dear to my heart, Mr. Rich. So it's nice to see them still persisting in some of the markets we talk about here on the show. But out to June, listeners, you might be saying, what is the vol? Another thing that makes SOFR attractive, it's not just the volume, it's the volatility. Most people look at the rates complex and they think, a 7 vol, a 5, that's not exciting. Here's a 3-month SOFR coming in the June complex, nearly a 51, 50 and 2/3, actually off of nearly 4 points on the week, about 3.85 points on the week out here. In terms of skew, things are looking pretty frothy out here, listeners. Last week, the puts, 12.5% discount, so nobody wanted them. This week, they're pretty much flat, so that discount has vanished. And then the calls last week, 20.6% bid to an already very lofty, nearly 51 at the money vol. And this week, nearly a 34.9%. So, Rich, it is all about the calls, at least from a skew perspective. Then we get out there to the most active contract out there in a just beast of a product, 3 months SOFR, like we said, over 5 million contracts. It is the 94 7/8 puts expiring in June here, doing 142,000 contracts exactly. 68,500 of those going up on Monday. So that's your lead day, obviously, listeners. And again, just Monday, just those puts, that's going to eclipse a lot of the contracts and products and complexes we're going to talk about. Hey, we just talked about peso. It did 12,000 contracts in total all week. Here's the 94 7/8 puts on Monday doing 68,500 contracts. So again, kind of puts these products in perspective. 38,100 on Tuesday opening there, 19,400 on Wednesday, slightly closing, and then 16,000 today. That's against an OI of a whopping 220,000 listeners. Just absolutely fascinating numbers out here. Right behind it, 94 3/4 puts. So it's all about puts all the time this week, Rich, at least on the volume front. Again, the busiest day there was Monday, 37,000 there, slightly closing. So maybe a bit of a roll up from the 94 3/4 puts up to the 94 7/8. That is certainly possible. If that's the case, they're doing it pretty much 1 by 2 because they're taking off 37,000, putting on 68,000. So intriguing stuff out there. 34,000 on Tuesday, mostly opening there. 32,000 today. So these puts have been remarkably consistent all week long. And then interestingly enough, 16,000 exactly of the 94 3/4 and the 94 7/8 puts have traded today. So clearly there's a vertical or something going up out there today. It's impossible to tell if they're rolling or not because there's over 300,000 of the 94 3/4 puts open out here. My goodness, Mr. Rich, there is a lot of paper out here. Also interesting, had some interesting conversations with folks down here this week at FIA about how a lot of the folks in the real estate market are using the 3-month SOFR to hedge a lot of their rate risk out there. So a lot of fascinating use cases that maybe don't leap to mind when you see this enormous beast roll across your screen here. But Rich, anything surprising you out here? Or maybe does that reinforce your trade that seems like at least this week the rest of the SOFR market is lining up in June behind Juicer?
It definitely reinforces the view that I had on that report, et cetera. And I remember that report kind of came out. I was writing it, the inflation data was coming out for that week, and part of it was like forecasting higher inflation and forecasting rate cuts to get priced out, and that's what we continue to see, and we continue to see with the inflation reports we got this week, and that's where the demand for those puts is coming from, and I frankly would expect it to kind of continue a little bit, to be honest with you. So no, it doesn't. It's not surprising, and the volumes aren't surprising either, because I mean, you think about a lot. When we talk about people in CRE markets, et cetera, looking to use it to hedge. I mean, we're finally getting to that point where I think where a lot of people, not just in financial markets, but those that are, in any sort of rate products, mortgages, et cetera, we're so used to before where euro dollars, where everything was priced as a spread to LIBOR, right? So people were so used to that, and we're finally kind of getting to that point where I think people are used to everything being priced as a spread to SOFR, and that just naturally leads itself to a ton of hedging activity that will go on in this product, and I think that's where you're seeing the size and the volume numbers that you're talking about, they may not be huge moves, when you talk about the fractions, et cetera, and I love the fractions, but they might not be huge moves in price standpoint, but when you look at it from the standpoint of price times volume, that's some real money to be made and lost in that complex for sure.
Well, clearly, 5 million contracts can't be wrong, right, Rich? Talking about reports, that kind of brings up an interesting other topic that you were talking a lot this week out there about our old friend, the COT report, aka the Commitment of Traders report. This is the question we get a lot now, Rich, especially on a show like this, which is so data heavy. We're talking about a lot of near real-time data, who's opening, who's closing, who's rolling, what's the skew, what's the vol, all these things we could tell people in nigh on real time in a show like this. So as a result, the question is often posed to us, what is the point of the COT report? It's old data by the time it comes out. It's aggregate positions. It leaves out a lot of stuff. And I'd much rather, tune into a show like this and hear this kind of real-time data, or again, check out the TWIFO reports for myself and see what's going on out there. But that said, it seems like you're intrigued by what's going on out there in the COT reports, because you were tweeting out a lot of them this week and maybe finding some interesting nuggets in there. So, Rich, apparently you still see a use for the COT reports. Why are you such a fan of them? And what are you seeing out there that's catching your eye this week?
Yeah, I mean, I think I get where one wants to talk about the fact that they've been around forever, so they can't possibly be useful, right? And at the same time, I'm on Twitter and I see people referring to like magazine cover contraindicators and things of that nature, which is even older than that, right? So I think, to me, there's a lot of different data points that are out there, and I just like to see, when I see patterns that are emerging. It's not that I would build a quantitative trading model based on exact levels in these reports, but when I see patterns emerge, it always kind of makes me curious and makes me want to dig in a little bit. And the point that I was looking at on the COT reports was not that there was any one that stood out. It was that, you know, in this Excel with options, every other week I'm looking at a different product, right? And so I'm going across all the different asset classes, et cetera. And what I noticed is that every time I bring up the COT reports, no matter what asset class it was, you know, when I look at either the leveraged or the managed money, they were short in every one of them. And so, you know, and then it's not like they're structurally always short. And so it wasn't to say something like, oh, of course, that those are always short. But whether it was S&P 500, which, okay, maybe you understand why people are short there. People think the equity market's overvalued. It might even, frankly, be, to be honest with you, having worked at a hedge fund, the large S&P shorts was probably more correlated with the fact that people couldn't find good single stock shorts and they were using futures instead. So it actually might even be a kind of a bullish indicator in the sense that people were buying names and selling futures. But of course, natural gas, I mean, it's been trading horribly. But everyone's short there. Copper, one of the largest shorts in copper in the last 3 years. Soybeans, huge short in soybeans. 10-year futures, huge short in 10-year futures. And you can go through on each one of them and make the idiosyncratic story for why managed money or leveraged money was short those. But I just found it striking and didn't find a period and certainly in the last few years, where I could look back and see when this kind of this money was short futures across all of these different products at the same time. And so I just thought that was something that was worth highlighting. So yes, I hear the point that maybe it doesn't matter. It's maybe a little bit dated, but when you start to see a very large position across a number of different products all leading the same way, it makes you kind of think, what's going on here, and is there something more that we should be thinking about? And now then the question to me is, as you start to see prices move in the opposite direction, what does that mean to the stability of markets? Right? We've seen in the last week we've seen a big move in oil, which has taken soybean oil higher. So what does that mean for the short in soybeans? We've seen copper potentially breaking out and moving higher, even though everyone wants to talk about the fact that China's going into recession, Japan's in recession, Germany's in recession, UK's in recession. So copper's got to go lower, but futures are now starting to break out and leveraged money is really short. So you look at it and I'm like, what does that mean for the stability of these markets if all of a sudden there has to be a fair bit of short covering across a number of different markets? And so I just found the aggregate view was interesting to me and worth highlighting and pointing out.
Fascinating stuff. Let us know, listeners, are you still using the COT reports? It's an intriguing data point. I know, so there's pros and cons to all of it. You folks have your thoughts. Hit us up. Let us know. As we keep on rolling, it is undeniable, once again, listeners, there's our number one dark side mover this week, as well as our number one light side vol mover. Yes, it is Nat Gas. Here we go.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
All right, listeners, to the world of energy we go into that drop down, pop out of rates, go up 3 slots to energy, then go down 3 slots in the product family to natural gas, where we will conclude our journey this week. Nat Gas, another product that came up a lot this week. For obvious reasons, it is very much dominating a lot of the mind share, a lot of the market share. And this week, no exception, 782,000 contracts on the tape this week. So Nat Gas putting the lie to the notion that as a product falls farther below 10 or even $5 in the underlying, that the use case for the options dwindles. Cheaper Nat Gas gets, the more options hit the tape. So it's a funky conversation. I brought that up to someone this week, and they said, after WTI went negative, don't poo-poo anything. So there is some of that, I think, lurking in the background of the market out there as well. And where is the Nat Gas hanging out this week? At about a 171 out there, off about nearly a dime in that front future, a little over 5%. Rich, Nat Gas, I was only half joking earlier, but it does seem like it is inescapable on the show week after week. It's a vol mover, it's an underlying mover, it's a volume leader. It's kind of across the board. It's checking all the boxes. So it does seem to make its way onto the show almost every week. It doesn't seem like that's going to end anytime soon. What's been catching your eye, if anything, out there in the world of Nat Gas these days, sir?
Yeah, I can imagine that quite a few people have been trying to pick a bottom and getting stopped out, and now they're using options to try to pick a bottom. And maybe we don't know a bottom's in until people just stop caring about it. Maybe, I guess, I don't know. When it stops showing up on your movers and shakers, that might be when it gets the most interesting if you want to think about a sentiment analysis. But this is one to me that I think I think Nat Gas and your views on Nat Gas, frankly, I can see where who wins the election is going to really matter a lot to Nat Gas. And I know I looked at it a little bit versus the peso. I haven't really looked at it versus Nat Gas, but if you think about it just logically, we know what's happened in terms of the kind of slowing down of the LNG approvals, which is a big source of potential demand for Nat Gas, which has hit Nat Gas and some of the and some of the major players in that. In the possibility, I know some have talked about of us maybe exporting Nat Gas down to Mexico for the factories that the U.S. factories that are coming into Mexico lately. We know that a lot of those things only happen probably with a different administration. So the demand case, I think, for Nat Gas might change if there's a different administration under the current administration. It doesn't seem like it will. So you hate to be political, but I wonder if that's a catalyst for what seems to be a fairly relentless decline in price.
Yes, whenever we joke about, who's trading the 1 1/4 puts or the 1 even puts in Nat Gas, everyone brings up, well, remember 2020 with crude oil? That's the one thing everyone can't escape in the energy complex these days, Rich. It seems like it's lurking in the back of everyone's brains out there. But let's see what we had on the tape out here in Nat Gas this week. Like we said, nearly 800,000 contracts on the tape. Of that, 35% of it going up in the April contract that has about 11 days to go. So we will hang out there. What is our vol right now? About 65.80, actually up about 8 points in that front portion of the curve, which makes sense. Nat Gas, our number one vol light side mover this week. So makes sense. We're seeing a little bit of firming up in the near portion of that curve. Skew wise, not a huge evolution from last week. The puts last week, 6.1% bid. So again, reflecting, even though we're hanging out below that 1 3/4 strike, still a little bit of a bid out there for those puts. 6.2% bid this week. Again, I'm only half joking about the negative. But it does seem like people, whenever they're talking up this downside put action, that does linger in the back of their minds. I don't know if you're buying the 1 3/4, 1/2 puts for that reason, but nonetheless, that flow is out there. And then the calls, 3.5% cheap last week. This week, about 1% cheap. So getting a wee bit less cheap, but not a huge evolution on the skew front this week. Where the action was, though, the 1.5 puts. That's where everybody's lining up this week. Rich, pick a month, and it's 1/2 puts. In the April contract, where 35% of the overall volume went up this week, there's about 38, almost 39,000 of them going up. But we're going to go actually out to the May contract, where the 1/2 puts did nearly 53,000 contracts this week. The big day for those on Wednesday, almost 21,000, so mostly opening there. 16,500 today. That's against an OI of 47,000, so could be taking some off. I mean, we have come down a little bit, but I don't know if you're taking off your 1/2 puts yet. Then 8,800 on Tuesday and 6,600 on Monday. Looks like closing to start the week and then opening the rest of the week. And again, right behind it, like we said, 38, almost 39,000 of the 1/2 puts in the April expiration cycle going up this week as well. And of those puts out here this week, let's see. There we go. 38,000 this week. The big day was today, 12,200 today, 11,500 on Wednesday, slightly opening, 11,200 on Tuesday, slightly closing. So maybe a little bit of back and forth on those 2 sessions. And then on Monday, we had about 3,200. So pretty light day on Monday out there. So a lot of action. I'm supposing, Rich, this doesn't really come as a big surprise to you that we're seeing a ton of 1/2 put action out there in Nat Gas this week, sir.
No, it doesn't. It doesn't really surprise me at all. I think that, again, that's probably people looking to set up as synthetic long calls, et cetera, would be my hunch. I don't know. It's interesting though, but I think that's, to me, when you see moves at this extreme, I guess I think being long some sort of vol. Now that's I don't know if that's set up as a directional trade or a volatility trade, but I always like, oftentimes we think about assets that go vertical, futures that go vertical or parabolic, and you naturally want to get long some convexity or volatility, and when the price would go to the go sharply higher. But that's the same idea when things are kind of in relentless decline. You could kind of if you get a breakout, move higher. Again, I think people are short, so you might finally start to see a sharper move higher. But it's like you mentioned before, like if we start to go into some uncharted territory on the downside, who knows what can happen? So being long convexity, being long volatility here, just seems like it makes a lot of sense from a lot of different angles or viewpoints.
And speaking of those angles and viewpoints, let's get some of those now. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's get to it. See what you folks had on the brain over the past couple of weeks. Last week, we asked you, it's hard to believe we're coming up on the 2-year anniversary when CME and CBOE listed those 0-day contracts, kind of kicked off this modern 0-day revolution. So in light of that, we asked you last week, are you trading 0-day options? And again, everyone thinks this is just a slam dunk. Of course, everyone's going to say yes, but I know our audience, a little bit savvier, a little bit more skeptical, and that shows up in the numbers. 50% exactly saying heck yes, 43.8% saying heck no, so almost split down the middle, and then 6.3% of you saying not yet, but you're curious. Rich, are you surprised, given all the volume out there in the 0-day contracts, that our audience, the savvy bunch that they are, still remain a little bit skeptical, a little bit on the fence?
I know your audience is savvy. I'm not surprised that that's the case at all, because I mean, really, when we're looking at 0 DTE, you're talking about you've got some leverage embedded in there, of course, as we all know from trading around expirations. But I think your audience is looking at for more the optionality aspect of things, and so they're going to want to go out a little bit further and really kind of let those options work for them instead of having to sit there and kind of chase around deltas all day long. So that doesn't surprise me, really.
And then this week's question, Rich, surprisingly one we've never asked in the long history that we've been engaging with our audience with our questions of the week. A very straightforward one. Quite simply, how many options positions do you normally keep open in your trading account on any given day? I gave you 4 choices, 1 to 5, 6 to 10, 11 to 15, or north of 15. Mr. Rich, if you have a say on this, if you want to look at your screens and see how many positions you have open on a given day, you're probably going to be a bit of an outlier. And then B, where do you think our audience has fallen?
Honestly, Mark, it depends on, I do use a lot of options, right? So it's just kind of what I've always done. So I probably would have more than most retail, but I also tend to get more active at either certain moves in the markets or based on my schedule sometimes, right? If I'm super busy, teaching, I'm probably not going to have as many options because, we all know that you have to really kind of watch over all your option positions. You don't want to just not look at them for a couple of days as well. So life sometimes gets in the way of your options trading. But if I had to guess how many your listening audience would have on, I think I would probably say 6 to 10 would be my guess.
A good guess, very close, sir, but actually 1 to 5 took it, was 60.8%. I should say is taking it. You have another day, listeners, if you're listening to this on the on-demand side. And I can see that sometimes people trade a lot day after day, especially with the 0-day flow going up out there. So you might have a small number of positions on every day, but you're doing it over the course of every day. So your total volume is quite a bit, even if maybe intraday it's not as many, which I also understand. People are busy. They have day jobs. They can't babysit more than a handful of positions. So 1 to 5 taking it right now, 60.8%. Followed by number 2, Rich's Choice, 6 to 10, 19.6%. Then we get the bangers north of 15, 14.7%. And then right now bringing up the rear, 11 to 15, 4.9%. A lot of you getting in there voting. If you haven't voted yet, at Options is the place to go to make your voice heard. All right, Mr. Rich, that music means you have survived another go-round on the old TWIFO program. How'd it go? Did you have fun, sir?
It's always a good time. We covered a lot of stuff as usual, and there's still a lot of fun stuff going on in the markets. And I think the cool thing is when you talk about options volume going up and what people are talking about at FIA, we're seeing really good explosive growth across a number of different options that people normally don't think about, and it just creates, I think, more opportunity for people to look at things and more opportunity to maybe express some views where you didn't even know you had some views, but where might be some interesting opportunities for you. So I think it was a great time, and I look forward to coming back on.
Took us in some fun places you don't get a chance to go very often. FX and SOFR coming on the list, Rich. In the meantime, in between your appearances on the show, if folks want to check out what you're cooking up, where should they go? What should they do?
Well, if you want to see me on Twitter, at ExcelRichard is my Twitter handle. As usual, you can find me in my biweekly CME group report, Excel with Options. Sign up for that, subscribe, and it'll come right to your inbox. And we cover these different topics in different asset class every other week. And I always try to find a good option strategy or what we think is a good option strategy. And then, of course, I have my own blog that I write where I cover all different types of stuff from a macro and market standpoint. And that's called Stay Vigilant, and it's on Substack. So stayvigilant.substack.com.
There you go. Check him out over there. Check out his Excel with Options report as well. All this data we're talking about today comes straight from his column. So if you're subscribed to that, you're getting that in your inbox in between episodes of this show. And of course, you know where to go to play along with the TWIFO home game, cmegroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern. Going to talk some ball on Volatility Views. Who's going to join us in the hot seat there? Well, you got to tune in to the show to find out. After that, coming back exclusively for all you cool cats and kittens in the secret club with a little bit of the old options oddities. What crazy, wild, unusual activity is going to make it on the show this week? Well, you got to tune in to find out. Listeners, the place to go to get access to that, theoptionsinsider.com/pro, the place to go to learn more. Back again on Monday with the episode of the Option Block, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.